Hey everybody, welcome to Mortgage Today for Friday, January 12th, 2024, and oh, what a day it was. UMBS were up 18 basis points on the open. Markets are still digesting yesterday's data. The month-over-month core CPI came in yesterday at 0.3 on a 0.3 forecast, was 0.3 previously. Year-over-year core CPI came in at 3.9% versus 3.8 forecast. It was 4.0 previously, so down a little bit, but still almost twice the target. Jobless claims came in at 202K on a 210K forecast, so staying strong. 203K previously. Even though the month-over-month core number was as expected, the unrounded number was higher than expected. The closely watched shelter inflation category also ticked up to 0.5 month-over-month, which is not going to facilitate a drop in target inflation. Top it all off with jobless claims remaining very strong, and bonds are moving back to the unchanged levels yesterday. The CPI, excluding food and energy, rose 0.3% in December on an annual basis. The so-called core measure, like we said, increased to 3.9%. Economists favor the core metric as a better gauge of the trend in inflation than the overall CPI. The increase in shelter accounted for half of the increase and has been the dominant factor in price indices for a while. Another notable increase was car insurance, which was up 20% year over year. Then today we got PPI added onto it. Core month-over-month core PPI came in at 0.0 versus a 0.2 forecast. It was flat previously. Year-over-year core PPI came in at 1.8 versus a 1.9 forecast. It was 2.0 previously. Where CPI may have failed to inspire with tales of disinflation, PPI is at least giving it a try. Unfortunately, this report doesn't punch nearly as hard as the other one. We also got the Cleveland Fed President Loretta Meester said that a March rate cut was probably too early. The bond market traded about as well as anyone could have expected on a week where the core monthly CPI came out at 0.3 versus 0.3. If anything, the level of bullishness and resistance was a bit higher than the average market participant probably expected relative to the available data. Part of the reason is speculation that we're about to receive some sort of confirmation that the Fed is willing to remain friendly despite the big drop in rates at the end of 2023. There's specific speculation that Tuesday's appearance by Waller will contain clues about the Fed's roadmap. We can't know if it will or won't, only that it would make an interesting start to a holiday shortened week. The UMBS 6.0 closed down 11 basis points, and the 5.5 actually picked up 19 basis points, which is a really odd thing to see. So maybe that 5.5 is going to come up and help us out a little bit there. We also got news that JP Morgan reported earnings per share that just topped Wall Street expectations. The stock is up 2% in the pre-open. In the state of the economy, Jamie Dimon was cautious. The markets expect a soft landing, but a soft landing might be a euphemism for stagflation. We saw an uptick in provisions for credit losses in consumer lending to $2.2 billion compared to $1.4 billion in quarter 3 and $1.8 billion a year ago. That's quite a bit. Citi missed earnings expectations due to a lot of special items. Book value per share fell about 1% on a quarter-over-quarter basis. We did see a big uptick in credit losses, which rose 22% on a quarter-over-quarter basis and 69% on a year-over-year basis. Mortgage origination fell 4% year-over-year to $2.8 billion. They also announced 20,000 job cuts. Looking at next week, we have a busy calendar for a short week. Monday we are off with the MLK holiday. On Tuesday we have Waller speaking. On Wednesday we have retail sales. We have Barr speaking. We have Beige Book. We have Williams speaking. On Thursday we get Bostic speaking. Jobless claims. I don't know why Bostic speaking is on there twice. I guess maybe he's going to say a whole bunch of stuff. We also got a couple of bond auctions, 10-year and 20-year bond auctions in there, and then consumer sentiment and existing home sales and University of Michigan conditions on Friday. Things you can control. your planning and your goals. So check out our sponsor at wellthatmakessense.com. Got a great series going from the awesome book Traction, which is by far the best method I have seen for planning out your year and achieving your goals. So the first one is Traction 1, the six must-haves for organizational success. So check that out on our sponsor at wellthatmakessense.com.